All right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Inner Circle Live pre-New York session. I'm your host, Ryan Carthage. We'll be joined shortly by my awesome partner, Mr. Benny Allen. Hope everybody's doing well today on this beautiful Tuesday. As always, let's turn off all distractions, grab a pen and paper, let's take lots of notes, and let's make sure that we participate and engage. And as always, I want to start our day off by taking massive action. That action stands for accepting all possible losses before entering a trade, preparing you for any outcome, setting yourself, body, mind, and spirit, ensuring a balanced approach to trading, trusting education, strategy, trade skills, and intuition. Imagine your trade successfully materializing, obeying your trading strategy, avoiding decisions based on greed or fear, and never looking back or stopping once your trade has commenced. All right. So let's if everybody can hear me okay, drop me one in the chat and we will get things underway. All right, appreciate it. So let's hop over to trading economics. We'll take a look at things there, get an update on where things are overall, and then we will dive in. All right, so let's get to it. All right, so Eurozone, Euro area industrial producer prices rose 0.8% month on month, June 2025, ending three consecutive months of steep declines and aligning market expectations. Energy costs rebounded sharply, increasing by 3.2%, following a 2.2% drop in May. Prices for non-durable consumer goods edged up 2.2%, down from a 0.3%, uh, down from 0.3% in May. Uh, while durable goods and capital goods prices both rose by 1%, the latter matching previous month's pace. Meanwhile, costs for immediate goods declined for a third straight month, right? So producer price, the cost of producing things, right? From the business side of it, uh, rose in the Eurozone, okay? So we got the euro area trying to figure out what their next move is, whether another cut or to continue to hold rates where they are. So that's where we stand there on Eurozone producer prices. Um, ba, 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 ba. European stocks extended gains for the second consecutive month, with stocks 50, stocks 600 rising 0.4%. Investors continue to shift their focus toward corporate earnings while closely monitoring the global trade developments. Meanwhile, right, market participants have increasingly priced in the potential of interest rate cuts by the Fed. Um, on the corporate front, BP shares rose after the oil major reported better than expected second quarterly profits. All right. Diego surged 6% after reaffirming its full year guidance, while DHL jumped 5% following a solid increase in earnings. Infineon Technologies climbed 3.6%, right, on strong quarterly results. Hugo Boss added 2% after reporting a profit increase and reaffirming the 25 fiscal 25 year outlook. Um, so stocks up a little bit, but still watching the tariff conversation in the background, all right, as things should or are scheduled to take place on I believe it's on the 9th. Um, so that is that. And we got the euro, right? Euro traded above 115 in May, I'm sorry, early August rebounding from a recent 7-week low of 113 as markets anticipate easing from both the Federal Reserve and the ECB, with the Fed expected to ease faster and more aggressively than the ECB. Right, a weaker than expected U.S. July payrolls report, coupled with sharp downward revisions in May and June, anticipate market expectations of Fed cut as early as September, with at least one more cut anticipated by the year end. Meanwhile, money markets are pricing in roughly 60% probability of an ECB rate cut by the end of the year, right? 80% by March. Policy makers are expected to remain cautious, closely watching the economic impact of the new tariffs uh, and stable inflation trends. Right, recent data showed Eurozone annual inflation holding at 2% in July, slightly above the 1.9% forecast, marking for a second consecutive month um, at the ECB target. Okay. Um, Additionally, on the Federal Reserve side, um, right, market participants are betting that 88 to 94% chance that the Fed cuts rates in September. So it's almost a certainty that the Fed is going to cut rates in September. Um, so that's going to be something that we plan for, right? Plan for potential another market surge come that time. Okay. There are some concerns of a near-term retracement of about 10% in the market, right? Technical patterns and just overall market sentiment right now. So that's something to also keep our eyes on. Um, mm, 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 as we move through the coming weeks. All right. So that's the euro and the dollar, the pound. Pound rebounded to 132 from 11-week low of 132.1 on July 31st. As the U.S. dollar weakened following the softer than expected jobs report, that signaled cooling in the labor market. However, the pound posted a steep 3.8% decline in July. We'll take a look at copper also. Um, Worst monthly performance since September 2022, as concerns over the UK's economic outlook and fiscal health continue to weigh on the sentiment. Investors remain increasingly pessimistic about Britain's growth prospects, right, fueling expectation that the Bank of England may cut rates by 25 basis points in August, with another cut likely by the year end, as it shifts focus to supporting growth. All right. So coming out of the restrictive territory. So that's the pound. The yen, Japanese yen hovered around 147 per dollar on Tuesday, uh, holding recent gains after minutes from the Bank of Japan in the June meeting indicated policymakers remain open to further rate hikes if trade tensions subdue, right? So those trade tensions and the uncertainty still have concerns in the market. Still, the board maintained that current rates are appropriate amid persistent uncertainty. The Minister of Finance official also emphasized the need for the BOJ to respond flexibly, particularly in managing its bond purchases to maintain market stability. Last week, the BOJ left rates unchanged, but raised its inflation forecast while cautioning about mounting risks from global trade attention. Meanwhile, the yen has gained over 2% in the last two sessions as the dollar weakened following the jobs report, which fueled bets of an upcoming rate cut. Okay. Um, so that's the yen. Canada. Canadian dollar strengthened past 138 per dollar, rebounding from a two-week low. 138.6, seen July 31st, as the greenback tumbled following the non-farm payroll report. 73 jobs versus 110 expected. And downward revisions slashing 258,000 positions, intensifying bets of the Fed rate cut in September. At the same time, Canada's economy shows surprising resilience, with May's 0.1% GDP contraction giving way to a likely 0.1% rebound in June, a 0.7% surge in manufacturing output, bolstering the Bank of Canada's decision to hold its policy rate 2.75, and contrasting sharply with the Fed's dovish pivot. Although President Trump's abrupt 35% tariff announced briefly rattled the markets, Canada's USMCA exemption cut a cap the effective levy on exports at roughly 5%, muting any major hit across the trade, across the border trade flows. Okay, so didn't impact them as much as as face value would say. So that's Canada and where they are, right? So things are lining up and supporting their decision to hold their rates. Over to the calendar. Yesterday we had Swiss CPI came in below expectation, right? Good thing for the Swissy there. Inflation coming down. Uh, ba, 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 ba. For today, got ISM Services PMI at 10 a.m. We have employment change and unemployment rate for the New Zealand dollar, right? So pretty relatively light beginning of the week, okay? Um, We've got FOMC members speaking, we got oil inventories, we got retail sales for the euro, okay? And then on Thursday, we have monetary policy out of the Bank of England, right? Expecting a potential cut there. Then we have unemployment claims for the dollar. Likely see that tick up. Um, mm, mm, mm. Remember Bostic speaking, Bank of Japan meeting minutes on Thursday. And then on Friday, we got Canada employment change and unemployment rate, more FOMC members speaking. So a lighter week, some sprinkled in towards the end of the week, Thursday and Friday, with some key reports. But that's where we are from a fundamental perspective. Are there any questions?
Did Japan give like another resistance level they was looking at before they stepped in?
No, nothing right now. No, there aren't any talks of them um, needing to step in. Um, Inflation is a little bit is creeping up a little bit, but they are good where things are. Um, we'll continue to watch that 150, 160 range, but they haven't mentioned anything regarding any intervention. They understand part of their reason for holding is the uncertainty, and they're aware that with all that happening, there's going to be some volatility there. Um, so they're trying to sift through all of the madness on the tariffs to see where things shake out. So right now they're intent on just standing pat on where they are.
Thank you.
You're welcome. Any other questions? No? Okay. Also keep an eye on Russia, Ukraine. I didn't look at oil. Let me go back here real quick. Because it's also an important one. WTI crude oil futures fell below 66 per barrel on Tuesday, marking the fourth straight session of losses and growing concerns about supply glut. The OPEC's decision to increase output uh, outweighed the potential impact to tighter Russian oil supply. Sunday, OPEC agreed to bolster production by 547,000 barrels per day in September, completely reversing a 2.2 million barrel per day cut made by eight major countries in 2023. Meanwhile, fresh U.S. pressures on India to stop purchasing Russian oil as Washington seeks to push Moscow toward a peace deal with Ukraine, raising concerns about potential disruption to global supply flows. President Trump said on Monday that he would substantially raise tariffs on India over its continued import of Russian oil. India is currently facing 25% tariff on its imports to the United States. These developments come amid an already uncertain global demand outlook, clouded by ongoing trade tensions in recent weeks' economic indicators, right? So you got oil under pressure with the additional supply, but you got Donald Trump threatening sanctions on Russia and increased tariffs on countries that purchase Russian oil. All right. Also in the background, I was doing some research and you also have potential increased tariffs on Switzerland as well. But I was doing some research um, and I kept getting just small hits about just geopolitical tension overall. And so outside of the trade policy, right, in tariff escalations, um, you have continued, I'll say continued uncertainty in the Middle East. There are reports coming out that Israel is doing some covert um taking some covert actions, seeking trying to find reason to re-engage Iran. Um, and that was reported by covert operations is the term I was looking for, right? Targeting Iran's infrastructure. And that was a report that came out July 24th um, in Al Jazeera. And at the same time, Iran took steps in early, really first and second of August to strengthen its internal security decision making. They formed a new defense council under Supreme National Security Council to streamline wartime responses, signaling preparation for future contingencies. Right. So you got some things happening in the background that that could pick up in the future. This is an article that I came across. I'll drop this into the chat. Institute for the Study of War. And this organization was started in 2007 to help give accurate insight to things that are happening on the ground in these countries where wars are happening, or the potential of war is happening. So I'm going to drop this into the chat. This is an interesting organization here that I came across, and I'm gonna keep my eyes posted on this because they have some interesting information on this. So something for us to keep our eyes on there. Okay. When it comes to potential for increased escalation over the coming months in the Middle East. Okay. Um, so I'm I'm going to continue watching those developments in the background. Nothing is major right now, but there are small, subtle things that are happening that could be a cause for concern in the Middle East, which could also then impact oil prices as things shift. All right. So just wanted to bring that to everybody's attention as well. Benny, good morning, bro.
Ryan, good morning. Good morning, everybody. How are you, Ryan?
I'm doing well, man. How about yourself?
Oh man, doing pretty good.
Awesome. Awesome. What's top of mind for today, bro?
I mean, outside of the tariff shenanigans, good earnings being reported, right? So we
Yes,
saw, I don't know if you talked about that yet. I know I joined a little bit late, but Palantir came through big, eh?
they
Um,
did. I did not talk about that.
yeah, they surpassed estimates for the first time, reported 1 billion in quarterly revenue. Um,
1 billion in quarterly revenue.
yeah, and they hiked their full year guidance, right? Um, what was crazy, so their revenue grew by 48%, during a quarter. But here's why I think it's just important for uh us to really never, give up on investing, right? And being investors and traders. Um, because it grew 48% during a period. Um, And it says analysts hadn't expected the $1 billion revenue benchmark from the Denver-based company until the fourth quarter of this year. So they're ahead of schedule. But listen, but here's the thing. So ton of revenue, right? Everybody can agree on that. That's a lot, right? And they surpassed
Hmm.
expectations. But at the same time, here's what the CEO said. We're planning to grow our revenue while decreasing our number of people. This is a crazy efficient revolution. The goal is to get 10 times the revenue and have 3,600 people. We have now 4,100. It says Carp did not specify if the company would lay off employees to achieve his ideal head count.
There's only one option.
Right. So we have to, you know, to stay on this side, right? Because it's just like how do you plan your life around that if you're an employee?
Hmm.
You know what I mean? So that's why it's important for us to, yeah, we're wage earners and things like that. We make money at our jobs, but to really just understand the game in its totality, understand what it's really all about, and play on both sides of the track, right? Be an investor as well. Learn the skill set. Be involved in the things. And pay attention to the things that we talk about pretty much every day in this group, right? That we're together. Because that's crazy. Like how much is enough, right? We're planning to grow our revenue while decreasing our number of people. The
Yep.
goal is to get 10 times the revenue and have 3,600 people. We have now 4,100. You're already a small company. You're already small. But yeah, that was just top of mind for me this morning, man. That's all I have.
Yeah, no, but you're spot on though, bro. Um, and as we move deeper into this AI revolution, there will be more job cuts, right? Because companies will become more efficient. Well, that's the term, more efficient, right? By utilizing AI in a lot of the repetitive tasks so that they can decrease their overall bottom line. Um, for Palantir specifically, they continue to expand on the government contracts. right? And
Yep.
their government from their revenue from the U.S. government for Q2 was 426 million. That's a 53% year-over-year change, right? And I believe they just
Wow.
secured, yeah, so defense contracts, 10 billion U.S. Army deal, and expanded Space Force engagement for strong term visibility, right? So they're continuing to expand their foothold in the government contract space. So in multiple departments. So that's going to be huge for their long-term growth and sustainability. Um, but with them being right smack dab in the middle of this AI space, they're going to continue to, like you said, cut jobs as they continue to grow their revenue.
So is that corporate welfare in a sense, right?
Yep.
So record tax breaks, right? But at the same
Hmm.
time being fed by the government.
Yep. Exactly.
Like make it make sense.
So here's the other piece to add on to that, right? Talking about the tax breaks. So we've been talking about these data centers being built and being, excuse me, being established, right? All of the expenditure for those data centers, they're able to write that off based on the new tax laws, retroactive beginning of this year, but they're able to write off all of that expenditure for these new facilities. Let's know what that means, right? These
Wow.
facilities are massive.
Wow.
They cost a ton. So Benny's talking about the tax breaks. The tax breaks are going to be crazy for these companies because that's retroactive to the beginning of this year. So you get to write off all of those expenditures, man. Um,
Wow. So how do you so besides collecting revenue off the backs of everyday hardworking Americans, how do you make up the revenue, right? How do you pull in the money into the government coffers to continue to feed the beast? You know what I mean? Like you can't make that up in tariffs.
yeah, you can't.
You can't. And it's not, and then not only can you not make it up in tariffs, even if that's not a consistent, reliable source of revenue because of the back and forth, because countries don't just sit back and take it, they retaliate.
Hmm.
So how does that create a steady stream and consistent flow of revenue into the government? Like how do you make up for this extreme level of tax breaks being given, but yet the same or companies that you're giving the tax breaks to, they're loading up on government contracts. Like to me that's not sustainable.
It's not. It's not. Not at all. Not at all.
So Elon was right on that part, huh?
Yeah.
Uh-huh. Uh-huh. But that's where we're going to start seeing the escalation in the separation of the haves and the have-nots, right? And back to your original point of it's urgent that we stay on this side. It's urgent that we really lock down this skill and put money into the spaces that are generating revenue because things are going to continue to escalate. They're not slowing down.
So explain to me what they're doing in Texas. in order to, with the emphasis on trying to regain the house. Because if what you're saying, with the tax cuts and everything, if they're not in control, will it still go through? Because they said they redistricting Texas.
Yeah, so the tax cuts are already in place, right? That big beautiful bill solidified that. What
Okay.
they're trying to solidify now is these midterm elections, if I'm not mistaken, Benny, right? And they're redistricting to ensure that they have the right votes in the right areas to keep that to cut down on the opposing party votes
Yep,
in those areas to ensure that they keep control.
yep, because they know that the policy positions that they've taken is a poison pill for them in the midterms in 2026. So you in essence cheat, right? You try to redraw the lines, right? It's just like what happened in Florida some years ago. I forget the ladies' district, right? They redrew the map. They redrew the map to where she ended up with the majority of the prison population. So the prison population was counting as numbers in her district, but they can't vote. They can't vote. So they just they redrew the lines like, oh, you got, however many people in your district, what are you talking about? But yeah, like a large percentage of them can't even vote because you redrew the district. So Ryan is 100% correct, right? So they're trying to they continuously try to move the goalposts and change the rules, and when things don't go their way, they take their ball and they go home. They want to go home, so they can't have their way. But that's the country that we live in. Because then you can't say that you have a democracy and you have free and fair elections when you try to do this, right? But gerrymandering is nothing new though. Like it's been an issue for a long time. Uh, both sides have done it. It's politics, but this is like this appears to be an extreme case. Let's just say that.
Yep. Yep. This is what Joy's talking about here. I'll drop this into the chat for you all to take a gander there. But yeah, so that's what she's talking about there on the redistricting and what that looks like. So, right, things you got to be aware of, right? Things you got to be aware of, things you got to know, things you got to understand, so that you can use your rights of voting to make an impact, right? And we all have to become more educated on the things that are happening, things that have happened in the past, and how they are. It's a cycle, and they continue to show up in different ways, right? We need to identify that cycle and step in to use our power in the way that we have, right? And get more people to use theirs as well.
Yep. And it's business, right? So we've got a friend of the family who owned two daycares. Both of them have just shut down. Why? Because because of the new policies from the administration, you know, they cut the funding, which pulled the vouchers that the people used to pay for daycare. So my question is simply, did you vote? Because 90 million people sat at home. You see? So it's business. It's strictly business, right? And when you ask that question and you get crickets, you pretty much get your answer. Now now she's out of business, right? And so like it all matters for you. And I say that because, right? Hey, get your investment hat on. especially here in this country, right? Business, owning a business, real estate, and the stock market. Those three things are very powerful, in this country, the way it operates. So, handle your business. Handle your business. So, it's very, very important the things that we talk about in this group. Those things that you don't pay attention to on the news channel that's going across the lower third on the ticker. That stuff matters. That stuff matters. It matters to your business. It matters to your work life. It matters to your investments. That's why we cover it on a regular basis, because these things occur on a regular basis. These reports occur on a regular basis, right? They cycle in and out each and every month. So, it's important to pay attention to all this, because it impacts every aspect of people's lives. So, yeah, good
Mhm.
stuff, man.
Absolutely. Absolutely. Um, yeah, Reese said it's supposed to be done every 10 years, and Trump's trying to change the rules in the middle of the game, right? They have it done for the the primary.
Yes, because the demographics are changing at a faster rate, now. So yeah, he's 100% correct. Every 10 years, like with your census, but things are changing at just an alarming rate in regards to demographics in this country, especially in Texas. Especially in Texas. So,
Especially in Texas.
yep, good point.
So I'm just I'm marking up Palantir here since this is what we were talking about, just so that we can see where things are headed and be clear on what our projections are for the stock, right? Headed to the 4-hour D extension just below the daily D extension. Okay. Um, so we got some opportunities here for resets and pullbacks, right? We're just shy of that D extension level right now. Okay. Just shy of that level, right? Likely tick up and hit that today. Um, yeah, Carolyn, that's probably true. That's probably true. When it comes to Medicaid and elderly and some of the nursing homes not being able to pay. Um, tons of impact, tons of downstream impacts to all of that, man. Um, so long term, this is our zone to watch, right, for Palantir. Okay. Um, 198, that's that weekly D extension level. Okay. We're headed there. We're headed there, right? We could come back with a pullback. So just be aware of that retracement potentially coming, right? And it'll be a low price for us to continue to add to that long position. Okay. Um, as we come down to the one here, we're running fib off the low, track this last leg, right? And that 1 hour D extension falls in between that 4 hour and that daily D extension. So all signs are pointing to the upside. And then once we get to that 1 hour, 4 hour D extension, we'll look for a retracement and then that continuation up to those D extensions there. You do have a lot of market participants preparing for a retracement in the market overall. So we'll slide over to the S&P 500 real quick. Um, Preparing for another leg down in this retracement. They're calling about 10%. Um, right? Because of this move here. We got a nice recovery here, but a lot of market participants are preparing for another move to the downside here, right? So it would just be about how much. How much is that retracement? How far does it go? Right? This line here, 61,444, is the previous high that we broke through, right? Is it a break and retest, as Benny talked about over the weekend, and then a continuation to the upside? Or, right, do we move a little bit further down retesting this B boundary area. I don't know that we fall too much lower than that, but this is the area that Benny's watching. This is the area that Benny's watching here, right? Where price came to on Friday, right? And we got that nice bounce and recovery yesterday. And the question is, does that recovery continue to happen, getting us to that 6,500 level, or uh do we see a continued move to the downside? Um, yeah, Carol, right? You always want a retracement to be able to buy low, right? So you look for those retracements in the market. That's what we talk about daily is those retracements into the zone. So Kathy was looking for the same thing we are, right? Pullbacks and continuations. Um, she's looking for the exact same things we are. Um, so that tells us that we're on point, right? And some of the best in the industry are talking about the same thing, low prices, right? And how do we get there, looking at where the market is. Um, Prices are high right now, right? Things are at extreme levels. And in order to, my words, in order to prepare for the rally after this rate cut, right, we need a low price. Benny's been talking about for the past 4 weeks now, right? Of August being a month of historically, right, retracements in the market, right? And so it's all about preparation and us being prepared for when that occurs, right? So we see here on the daily, we got an 80-20, right? Do we get a deeper move down? Maybe not down into the 618 level, but back to retest some of these previous highs to prepare for that move back to the upside, right? Um, so as we come down to the four, right, we're at a B boundary. I mean, just below the B boundary at the 236 retracement. But you see here, I saw this last night when I was just reviewing things. We broke the cloud here on the four. Nice strong break of the cloud. We're back retesting the cloud. So is this our setup for a move to the downside? I feel you, Reese. I feel you said it's hard to buy stocks, and it is, right? Prices are extremely high. So we need a reset, right? We need a reset. Um, they do keep going up though, right? And it's about the cycle, right? And where we see that reset come, it won't be everything. It'll be some things, right? But we might still see your tech stocks run, right? We might see them be resilient through that retracement and continue to move to the upside. They might have a smaller correction, but um, I believe there'll be some sectors that kind of hold on, while the majority of things that get the major news coverage see that retracement, right? And so looking at this here on the four, if we run a sub fib off the high, look at that, right? 618 retracement. Maybe we push a little bit higher, but the matching extension is where? 50% retracement. Okay. Boom. Right. So another leg down puts us right in close to our sweet spot. And that could be our opportunity, right, to get in. So we're going to continue to watch the developments here of the market to see where things go. Okay. So we come down to the one. This is what it looks like on the one. Strong break of that cloud. We broke back above here. We're bullish on the one, right? But do we get price to turn back over and make its way back down? So we'll see how the market fares today, in the next couple days, to prepare us for that 80-20. So yeah, I was gonna say. Um, but boom, this is what Reese is looking at here. All right, shallow retracement 118, 127 zone. We got that consolidation. We'll see what happens when the market opens. Do we get that move to start happening back down to the downside? Right. Um, so we shall see. Um, we shall see what this correction looks like, right? And are we able to get this next leg to the downside potentially to start this week? We'll see. Okay, so that's S&P 500. We didn't take a look at the dollar, but this is where we sit, right? We move down, we're retesting the cloud, trying to turn back over. We'll see if we get a pushback to the upside or if the dollar continues to move down as well, right? Strong bearish action on this was Friday. Strong bearish action, right? Do we get a pullback to retest some of that engulfing candle? And then do we continue to move down on the dollar as well? Okay. So that's the DXY from the daily. Now it's the 4. You got your 80-20, right? Shallow retracement 118 and 127 zone did not hit that D extension breakdown, right? So we might look for something like this on the DXY. Boom. Continue to the downside. Okay. Um, no, yeah. No, currency does allow you to trade small, right? It's just about managing the overall capital, right? And regardless of the asset that you choose, right? Just making sure that your percentages are in line. I think that's the big thing when it comes to the different asset classes is understanding the percentages. Okay. Euro dollar, euro dollar, daily time frame. 50% retracement. We started making that move to the upside. We got this reversal. Got some interesting things happening on the ECB side of things. They're trying to figure it out, right? Especially with the tariff conversation. We came back down just shy of the support level, trying to create a new swing low here, right? If we continue to see the retracement on the dollar, right, you see just the complete opposite of what you saw on the DXY, right? You got a bullish candle here. We're trying to pull back. Do we get a pullback, retest that bullish candle, and then continue to the D extension here with a retracement on the dollar and dollar weakness there, right? So watching this here for the dollar, come down to the 4. Right, this is our overall move on the 4 hour, similar to that daily, right? Strong move down, and we're trying to reverse here. Trying to reverse here, make this move back to the upside. We got a stochastic in the buy, pushing down into the buy zone there. Okay, and then down on your 1, this is what we're looking at, right? So as we come down to how we can execute on this potential continuation to the upside, looking for price to push down into our sweet spot here, right? We're above the cloud now, but can we get this retracement here to happen and give us that nice buying opportunity to move long? Okay. So watching for that action there on the euro dollar for continuation to the upside here. Questions here? Nope. Cool deal. Pound dollar, right? We read the fundamentals on it, and you see where we are, right? Talked about that move down and that weakness in the pound, bringing us down to that 131 level, right? Now we're looking to see, can we get a reversal? Do we retest this level and move down? We got a rate statement on Thursday coming out of the Bank of England, right? What happens? Do they cut rates, and does that move this back down to retest this 131 level? Okay, we got a stochastic in the buy zone here trying to create a swing low. So this will be an interesting development as we move through the week, right? To see where the data falls, see where the Bank of England falls, and see if that gives us either catalyst to push back down for a double bottom on the lower time frame, or do we see price continue to rise here off this 50% retracement level with weakness in the dollar? Okay, so something to watch here in that development. As we move down to the 4, right, we're sitting low in the zone, just above that A boundary, just above that A boundary, right? do we see this type of action? Okay. So deep retracement here, beautiful risk to reward opportunity, right? If we're looking long, getting us back to the highs here. Okay, so let's watch that one as we move through the week into that rate statement on Thursday. Whoops, didn't want to do that. Come down to the one. Look what you got. Boom. 80-20. Okay. Boom. We're getting some consolidation. Do we get a pullback? Right, to look at this here. Right? Do we get a pullback, retest some of these lower levels for a continuation to the upside? Okay. 80-20 on the pound dollar is on the move. Questions here?
No, sir.
Cool deal. The move that I did not pull the trigger on is the Swiss yen. All right. B boundary on the daily, super high in the zone. We have some capital flow shifting slowly into risk off assets because prices are high. Right. Like I said, you have market participants looking for a correction. Right. And so you got money shifting out, and you got a ton of things happening, geopolitical tensions, tariffs, right? Some folks are talking about the downstream impacts of these tariffs and the delayed inflation that's to come, and that is causing some concern in the background. So you're seeing some capital flows shift, right? Some profit taking, right? Some preparation for retracement, but you're seeing some capital. You saw over the past couple of days some capital move into the yen, right? From safe haven perspective. VIXI isn't high right now. It's in the 17s. Um, and it's creeping down. So we'll watch that. But retracement here, boom, right? Um, as we come down, you'll see, boom, 80-20 on the four. Right? All-time highs we're at on the Swissy. We continue to make them, right? But we're getting the reversal now. Strong. We got our consolidation. Didn't get to that D extension. Breakdown. Now look for a pullback and a continuation to the downside here. What is this level here? Yeah, I'm gonna pull these levels out here. Right? And for a pullback and continuation on the lower time frame, retest the cloud, continue moving to the downside. Okay. Come down to the one. Boom. Look at it. Almost textbook, man. Right? Shallow retracement, 118 and 127 zone. You got your consolidation. You got a break of the trend line, break of the cloud, pull back, almost a perfect retest of the backside of the trend line, breakdown. All right. It's beautiful. So again, we're looking for pullbacks and continuations. So we can come down to lower time frames. Look at this leg down. Oops. Press too early. Oh. All right, we already got to a 382 level there, but could we get a deeper retracement here? Set up for a move back down to the downside. Yeah, we just talked about the S&P 500 on that. Appreciate you posting that. Appreciate you
Yeah,
posting
I
that.
was on when you did it. I just went down
Oh,
low
okay.
to kind of
You broke up then. What were you saying? You went down
No, I
lower
was saying
to
I just went down to the lower time frame. I did hear series is come
mm,
on the 30-minute, but I think he'll push up. And that area that the D extension is on the 30 is the 80-20 zone on the 5. So
gotcha. Gotcha. Gotcha.
thank you, Reese.
Perfect. Perfect. Teamwork makes the dream work. All right. So this is where we are, right? That's on the Swiss yen. Looking for a continued move to the downside. Um, the Euro Aussie. It's moving back up, right? Pushed down to this level. Wasn't able to break this 177 level, right? And then we got a nice explosive move back to the upside. Okay. Got some consolidation happening here, but looking for this to continue to move over the long term. So we'll come down to the 4. Look at this consolidation slash retracement, push right down into that 618 level. Right? Push right down into the zone. And now we're reversing back to the upside. Okay. So let's continue to monitor this one, right? I don't know if anybody's still holding this, but right, there's still more upside opportunity here on this Euro Aussie. Off the deep retracement. Joy is kudos to you, Joy. Joy is a master at the patience and holding these trades for the long term. It's beautiful. Beautiful, right? So let's look for that continuation to the upside here. And come down to the 1, right? And you have that beautiful 786 retracement, and there's your reversal. So now what I'm looking for here, we could see a retracement happen like this, right? We broke that trend line. We're consolidating there. But we could see a retracement, retesting this bullish action here, and then get our move back to the upside. All right, this is an old markup there, right? So look for a pullback and continuation here on this Euro Aussie. 618786 level. Right? So that's your Aussie. Questions? Enjoy holders. Nope. Right. Cool deal. We didn't get through a ton of charts today. I think the conversation was good and needed, right? Just to continue to make sure that we're focused on the fundamentals of things and understand what's happening around us, and then how they impact the movements on the chart. So understanding the things that are happening in the background and the impact on our daily lives, right? Extremely valuable. Swing high just confirmed on the 30. All right, look for that move to the downside. Benny, anything before we wrap it up, bro?
No, sir. Great session as always, man. Appreciate it.
Appreciate you, man. All right, good people. We will be back at it tomorrow morning, 6:30 a.m. Eastern Standard Time for the pre-New York session. You all have a phenomenal, phenomenal Tuesday. Peace.